Hello traders, David here again. I told you I was going to make you a short video of today's price action and today's trading so that you would see more or less what was going through my mind, even though I did post the trades live with the exception of the first one. I did want to make that recap for you so you can see how greater risk reward benefits us from a trading standpoint, and we can take the maximum possible excursion of most of these trades. So I'm going to get in it now. I drew this area off of this structure and further back, and here too, and this also coincides with the history. I don't want to get too much into the history. I want to get into our trading session and make it a short video. So my expectation was for price to produce a new structure low down here. So I was primarily looking for shorts. However, I did notice that there was a lot of bearish momentum and the bulls were actively trying to get in, and this is a good demand area. So I did see the aggression here. I see the bears continue to be aggressive. I did see that the bulls were trying to get in, but they really weren't getting very far. Neither were the bears. Once the bears made this new structure low, I felt with this much volume, I felt pretty good about we were going to get a mid-range pullback here and then a shot at this new structure low. So once I got that strong rotation here, I entered on the next candle. I got a pretty bad fill because there was a little bit of momentum there. And then my stop was just literally a point or two above this swing. This made it a 17-point stop, a little more than I would like to see. And had I kept my stop above structure as my old rules would have said, I would have survived that stop and rid this down. Shoulda, woulda, coulda. I like my tighter stops. It has proven to me that it's much more beneficial to trade with the tighter stops. So I'm going to be keeping this this form of tighter stops. So got stopped out here, no big deal. This candle here, I broke a rule. I still felt that price was still going to drop, as I saw a lot of laboring in the bulls trying to take price higher. So I entered here as this candle was pretty aggressive on the bearish side, and once this candle opened, it immediately tried to get bearish, and once I saw it pushing down, I entered as I didn't want an expensive rotation after price had made a higher low and weak new structure high. I knew I was in complex correction of this swing. I didn't want to risk too much and have a expensive entry again and have my stop not be close to the structure area. So I was aggressive. I took the trade, and price sailed against me a little bit. I think it went another 16 or so points behind me. At this point, I did have my stop above this structure area here, and once I saw all of this weakness, I knew price was going to roll over. I just didn't know exactly how far price would continue to drift upward. So I wrote it out, and then price turned in favor and continued going down. And then once price produced this candle here, I reduced my risk to slightly above my entry swing here, just in case, as I already see the weakness on both sides. Nonetheless, the expectation was a new structure low, so I managed my trade from there. And once price got to these lows, I came to a break even, and then price really struggled. These candles really took a long time to form, really took a long time to complete in an area of strong demand. So I was aggressive and took my my exit there for 19 points and kind of erased that loss for the day. I was up a couple of points on the day, and now I'm looking for price to produce some sort of a correction here. And I mentioned on the thread that once price got up here, I was no longer looking for any shorts, as we see a lot more strength on the buyers than we had on the sellers, and we achieved a weak new structure high. So at this point, I was looking for a correction into a situation where I can get long. Now, price made a weak new structure high. What is the expectation? A deep, possible complex correction to the downside. Okay, that's why I said I wanted to take the trade deep here into the 618, 786 area. We did get both the deep correction and we got the complex correction. So I was looking for a 1-to-1 to the downside. I was primarily looking to enter somewhere in the mid 450s. I mentioned that on the thread as well. And then price came down with a little more strength than I wanted to see, but this rotation candle was just absolutely beautiful. It opened and never tried to trade 1 point below its open, and immediately shot up with a lot of strength and closed near its high and completely covered 50% of the previous. This is a really great rotation candle in the opposite strength and the opposite of the strength that we saw coming down. So this was a really, really good signal. It was a little more expensive than I would have wanted it to be. My stop initially was, I put it below the 78.6, and as soon as price started going up and interacted with these highs, I got to a break even. I mentioned that on the thread as well, +5. And then once price started struggling here in this area of complexity and structure, I decided to lock in 10 just in case price was looking to try to get bearish again. But I felt pretty good about, once I saw this strength here, that we would continue on into new highs and put a dent into this area. So once price achieved that, got into this area and saw this rotation to the downside in an area of supply, I tied up my stop even further and I locked in 20 points, which was just below this structure area. Okay, and then price farted around, struggled, and then once price got up here close to this 127, got deeper, slightly deeper into this area of supply, we see the bears wanting to come in again. So what I did was I tied up my stop even further and I locked in right below this candle here, which was the candle that I felt should hold price if the bulls were going to be strong enough to continue taking price higher. Okay, so I locked it in there. It was 28 points. Boom, got taken out on this one right here, and that was okay. Now at this point it was already 10:56. It's past my trading session, so I'm actively not looking for any more trades. But this was another rotation that would have been great to the upside, as you had really great structure here, 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 and here. Now had you entered, you would have entered on the next candle, which would have been here. Your stop right below, a couple of points below this. Risk reward wise, it's not great. It's not a trade I probably would have taken in real time, as I am trading right into an area of resistance, an area where we see that there are some people taking profits, some sellers trying to enter the market from all these traders that were long. It's a little uncertainty here as far as what the expectation is a new structure high, but we didn't get a very great projection. So there's a possibility here, especially with an area of strong supply, that we would correct it deeper. Okay, and it's not like price really tapered off here and off of this structure. It didn't really go anywhere. Then the bears came in, and I see the rotation. I see the small risk, but in the expectation realm of this, we expect a deeper correction. We're trading right into an area of strong supply or resistance, however you want to call it. So it doesn't make much sense to take this trade, even though the risk is small and it was outside of my trading hours. Therefore, I did not take it. But the trade moved nicely. It would have given you an opportunity had you been managing this. hit the 127, okay, at which point you would have trailed it very tightly from that, and you would have been taken out for, let's see, entering in at the round number for 8 points. It's not worth taking trades for possible 8 points of potential gain. This just doesn't make much sense to risk capital for 8 points. Okay, that was at best a 1-to-1 trade. Risking 8 to make 8 doesn't make much sense. Okay, but in this particular situation, we knew we were in for a deep correction. We got that deep correction. Our risk reward is our risk is literally right below this area here, not way down here. Our reward, since we know expectations play out over 70% of the time, now we have a lot of room to not only protect our trade, but a lot of room to lock in profit along the way. Okay, and trading with good risk reward. This one was an expensive rotation, an expensive entry. That's why my stop was greater. Had it not been that strong, finding that my stops are usually somewhere between 10 and 12 points, this trade would have erased it and gave me profit for the day. This gave me profit for the day, but it was one of those situations. This one was a little more expensive than I would have liked to have seen, but I had a clear expectation. I did have strength pushing me down, pushing price down, and I had a great rotation in price here, kind of like we had here. I had to take that, and it didn't work out very well. It didn't get taken out by much, by like 6 or 8 points. So it was still a decent entry. It just didn't survive that little complex correction that we had. But that complex correction happened on much greater weakness than the first one, and that is something that you wouldn't normally see on this, leading you to a pretty good expectation that it is just a complex correction and that price should roll over. You never want to see stronger momentum, greater volume on the second part of the correction, kind of like we had here. This is something that you do not want to see, but the market had already spoken. Okay, volume was already there. Okay, this is just desperate attempt by the bears to keep the market pushing lower. Okay, so now prices come back. As you can see, there's a lot of breakdown in this area, as we see that this area of supply is trying to hold, extending it across, let's see, 520. So I'm pushing this across the 520. We see that these areas tend to hold up pretty well. Boom, 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 boom. Okay, now this area is trying to hold again. This is a rotation to the upside again, not one I would take again. Why? Same scenario as here, only here it's worse. We've increased momentum to the downside, we've increased volume, we've corrected 100%, okay, on decent projection. So our expectation of a new structure high is very weak. It's very weak in the short term. Okay, in the long term, that is the expectation, because you can look at this as one clear swing, good projection to the upside, clear low, clear high. Expectation would be a pullback to somewhere around here, and then a new structure high. But for the short-term reasons, and seeing that the bears are getting stronger, we would pass up on this opportunity. Okay, keep your emotional state. Trade management should not be an emotional process. I know it is. It is for me sometimes as well. Okay, but try to keep it as objective as possible by having good grounded rules that you can follow. Okay, maintain situational awareness at all times. Make sure you know what your expectation is at all times. Make sure you follow your expectations. Try not to trade against them unless there's tremendous breakdown in price and in the order flow that would lead you to take that higher risk trade. Remember, trading against an expectations gives you a 70% chance of being wrong. Okay, keep that in mind. Try to trade in line with those expectations. Be efficient. Okay, take those entries on good rotation only after expectations have been met. What I mean by that is, if your expectation is possible complex correction, deep correction, don't take the first rotation in price you see that has some short-term structure. There's a reason why you have expectations. Those expectations come from your experience of seeing this time and time again, that once price rotates and fails on an expectation, gives you a new one, you usually get a deep correction. This is also consistent with what? Elliott wave theory. Now, I'm not an Elliott wave trader, but being a trader, I know a little bit about a lot of things. And that's also consistent with Elliott wave. Usually the first change in direction has, would be wave 1, corrects deeply. So wave 2 is a deep correction. So this is wave 1, wave 2, wave 3. We're correcting wave 4 into a possible wave 5. Okay? So, but I'm not here to advocate Elliott wave. I don't really follow Elliott wave, but like I said, I'm a trader and I'm an educated trader. I know a little bit about a lot of things, okay? And that makes me a well-rounded trader. Although I don't use Elliott wave, I can look at it and say, well, yeah, that's what it looks like. And I can definitely, have a trading discussion about it. But I don't want to deviate from what we're learning here, but have those clear expectations. Trade those clear expectations, okay? Wait for those expectations to be met. Take rotation. Find places to put your stop that if you're right, price should not get there. Keep them tighter. Increase your risk reward, okay? And the market will reward you very nicely, okay? That's all I have. I wanted to keep this short. I think I have accomplished that. I wanted to show you the first trade where my stop was that I got taken out. I wanted to show you my second trade, and I want you to also notice the efficiency of this. We're leaving very little on the table here. We're taking almost a whole swing. Okay, here took almost a whole swing. Now I didn't get into an area where I would have been comfortable taking an entry, but we took a beautiful entry and got out in a very nice place. We got in a nice place, a little early. We got out at a great place, okay? Understand what price wants to do. Understand the price action, and you will take very good trades, manage them very well, and take most of those swings, okay? I didn't take this one. Why? Because it was against, I would have been trading a possible correction. Now, although I saw the weakness here and I also saw the great demand area, and it would have been a great area to take a long considering how price behaved here, okay, it's still against an expectation. It's still against my trade plan, and therefore I didn't go chasing this, even though it would have been a very nice trade, okay? I still had a very nice and profitable trade, and made a great. Let's see, 22. All right. Okay. So these were my trades today. 1 loss, 2 wins, 29.60. Very nice.